Hey everyone, and welcome. So, 2025, what a year for commodities, right? I mean, it was absolutely explosive. In this breakdown, we're going to dig deep into what just went down, and more importantly, what the heavy hitters on Wall Street think is coming next for gold, silver, and even copper in 2026. Let's jump right in.
Okay, but before we get into the good stuff, I have to say this, and it's really important. Everything we're about to cover, all the analysis, all the numbers, it's all based on public research from some of the biggest financial institutions out there. This is purely for informational purposes. It is not investment advice. At the end of the day, you have to make your own calls. Always, always do your own homework.
Just look at that number, 175%. That's not a typo. That was silver's staggering gain in 2025. It was just a parabolic year, a year where these metals just shot to the moon, hitting peaks that almost nobody saw coming. So the real question is, what the heck caused this historic surge? And the million-dollar question, is it going to continue?
All right, so here's how we're going to break it all down. First, we'll rewind and look at the insane performance we saw in 2025. Then, we got to understand the big picture. What were the global forces that really changed the game? After that, we'll dive into the individual stories for gold, silver, and copper. And finally, we'll wrap up with what the big banks are forecasting for 2026.
Okay, let's kick things off with Section 1, 2025, the parabolic year. You know, before we can even think about looking ahead, we have to appreciate the sheer scale of the shift we just lived through. This wasn't your average bull run. For a lot of these assets, it was a fundamental reevaluation of their worth. And I mean, just look at these numbers. They really tell the story. Gold, it ended the year with a peak price over $4,500 an ounce. That's a 74% gain. Copper, the metal that basically runs our economy, shot up 36%. But the one that really stole the show, the big headline maker, was silver. It hit $84 an ounce, which is just an insane 175% gain for the year. This wasn't just one thing doing well. It was like a tidal wave lifting the whole commodity space.
So, what on earth changed the game? I mean, numbers like that don't just happen, right? They were the result of some seriously powerful global forces that completely rewrote the rules for investors. So now let's zoom out and look at that big picture.
It was basically a perfect storm for hard assets, driven by four main things. First up, you've got de-dollarization. That's just a fancy way of saying central banks all over the world started shifting their reserves away from the US dollar. Second, those very same banks started buying up physical gold like never before. Third, you had inflation that just wouldn't quit, which sent investors scrambling for anything that would protect their purchasing power. And last but not least, all the geopolitical chaos and uncertainty created a massive rush into safe haven assets. And check this out. This quote from a Morgan Stanley research paper really nails it. It says that for the first time since 1996, gold now makes up a bigger slice of central bank reserves than U.S. Treasuries. Think about that for a second. This isn't just some short-term trend. This is a massive structural signal about where the world's biggest financial players see real long-term value. So, with all that going on, where does that leave the traditional king of the castle? Gold. It's been the ultimate safe haven forever. But what's its place in this totally new economic landscape we find ourselves in? Well, gold's case is still as strong as ever. It's the asset everyone runs to when things get shaky. And who are the biggest buyers? The heaviest hitters, central banks, and huge institutional funds. Their demand is fueled by all those big picture fears we just covered. And looking forward, JP Morgan thinks that demand is strong enough to push the price all the way to $5,055 an ounce by the end of 2026. And here's a brilliant way to think about the difference between gold and its much more volatile cousin, silver. This analogy comes from a CBS News report and is perfect. Think of gold as a giant cargo ship. It's steady, it's reliable, it's what the central banks love. It moves slowly, but with incredible, unstoppable force. Silver's the jet ski. It's way more nimble, way more volatile, but it has the potential for these insane, high-speed returns. It's powered by a totally different kind of engine. And that jet ski brings us perfectly to our next topic, silver, the challenger with a dual identity. For decades it got stuck with the nickname poor man's gold, but that label just completely misses the point. The reality is, silver is leading a double life, and one of those lives is about to change the game entirely. Okay, now this is where it gets really interesting. Look at this breakdown. Nearly 60% of all demand for silver comes from industry. So this isn't just about people buying coins and bars as a safe haven. No, this is about silver's absolutely critical, non-negotiable role in things like solar panels, EVs, and the data centers that power AI. It has the highest electrical conductivity of any metal on the planet, which makes it indispensable for the high-tech future we're building.
And here's the real kicker. That skyrocketing industrial demand is slamming right into a supply crunch. This has created something called a structural deficit. And that's not just a temporary hiccup. For 5 straight years, the world has consumed way more silver than it has been able to dig out of the ground. We're talking about a cumulative shortfall of almost 820 million ounces, and there's no easy fix in sight. All right, let's shift gears to another incredibly important metal, copper, the silent hero of our future. It might not grab the headlines as a safe haven like gold does, but you could easily argue it's every bit as crucial to where the world is heading. This quote from the Oregon Group just hits the nail on the head. It says, "Solar, data centers, and electrification are not the trigger. They are the new floor." For decades, demand for copper was cyclical. It went up and down with the economy. But that's not the world we live in anymore. The green energy transition, the AI revolution, demand from these megatrends isn't a temporary spike. It's the new, permanent, much higher baseline for global demand.
So, just like we saw with silver, copper has this perfect storm brewing. Unstoppable demand meeting a very shaky supply chain. I mean, the amount of copper we need for AI data centers, for electric cars, for the entire green energy grid, it's just exploding. And at the exact same time, the supply is getting squeezed by major mine disruptions in places like Peru and Chile, plus new export restrictions from big players like Indonesia. It is a classic market squeeze.
All right, so that's the lay of the land. You've got these huge macro trends pushing everything up, and you've got unique supply and demand stories for each of these metals. So, what does it all mean for the future? Let's get to the fun part, the actual price targets that the big banks are forecasting for 2026.
And wow, the consensus here is overwhelmingly bullish. You've got JP Morgan and Goldman Sachs both calling for gold to head towards $5,000 an ounce. And then for silver, check this out. Citigroup has a massive target of $110, with UBS right there with them, around the $100 mark. I mean, these aren't some wild guesses from the French. This is the view from the heart of Wall Street.
So if you take away just one thing from all of this, let it be this. We could be in the early innings of a major structural revaluation of hard assets. We're living in a world of persistent inflation, of geopolitical instability, of de-dollarization. In that world, tangible things, physical commodities like gold, silver, and copper start to play a completely different and much more important role. And that leaves us with one final massive question to chew on. As that line between an industrial metal and a monetary metal gets blurrier and blurrier, are we watching the beginning of a new multi-year supercycle, or was 2025 just the peak of a speculative bubble that's about to pop? And that's where we'll leave it for today. If you want to keep digging into these huge questions and get more deep dives into what's moving the markets, make sure you hit that subscribe button for the FinAnatomy YouTube channel. Thanks so much for watching.